morning, everybody. Welcome to today's midweek update. Let's hop right into things. Like always, we've got plenty to talk about. And of course, uh, I'd also like you to let us know where you're signing in from. And yeah, type into the chat. Let me know that you guys are alive out there. All right. Without further ado, let's hop into the markets here. So we're looking at the NASDAQ. And the NASDAQ might seem okay if that's the only thing that you were looking at. But for those of you that have been with us for a little while now, you know that we like to look at the market through a multi-dimensional lens. And I'm going to bring up this Venn diagram that I have. Hopefully I can find it on here. I shifted some things around on my page, and well, let me just see if I have access to this Venn diagram or not. Um, I know what I'm going to do. I'm going to bring it up in one of our presentations because I always like to start off well with this in one of our chats. So I'm going to bring this over here and I'm going to shift the screen share, and hopefully you guys are able to see this. Okay, so let's do that. All right, so I'm stopping that screen share and I'm going to share with you guys this one right here. All right, so this is the lens that I like to look at the market through. There's three key lenses: general market, your system, and personal performance. The reason why I like to look at the market through this three-dimensional lens, if you will, is because it gives us that three-dimensional look. So it tells us where the market is at presently. Is the market robust? Is the market kind of so-so? Is the market heading down? That's very important for us to know because most stocks are going to move with the general market. Now, there's a couple of different ways that we can analyze the general market. Well, you could take a look at one index, but is one index really going to be robust enough? Probably not. I like to look at the market through 5 different indexes, and I also like to look at it across 3 different time frames. I like to look at the S&P 500, the NASDAQ, the Russell 2000, the New York Stock Exchange, and the Dow, and I'll take a look at it on daily, weekly, and monthly timeframes. That's giving me a robust look at the market. I'm also taking a look at some of the internals of the market. Things like how many stocks within the NASDAQ, within the NYSE, how many of them are making new 52-week highs? How many of them are making new 52-week lows? Because if a market is going to continue to rise, then it would stand to reason that you'll have more stocks making new 52-week highs, right? Same thing if the market is going to roll over, it would stand to reason that you'd start to see a pickup in new lows, or at the very least, start to see fewer and fewer stocks making new highs. And that's actually one of the things that we're seeing right now. We've seen for a little while. So I'm just going to switch the screen share uh, back to the charts. Here are the charts, right? So this is the NASDAQ. The NASDAQ's close to new highs, but you see this indicator down here? That is tracking the number of stocks making new 52-week highs and new 52-week lows. And you can see for about more than a week straight, almost 2 weeks in a row now, we've had nonstop more new lows than new highs. An uptrend can't sustain itself that way forever. And at the very least, it's a sign that there's probably some choppiness underneath the surface. So when I go and look at what stocks I'm looking to trade at, and that gets us back into that Venn diagram. Let's switch back for a second here. Let's switch back to this. So if I want to see, well, which way is the market really affecting me personally, right? And that's what you would want too. How is the market going to affect you? You should not just have a feel of the general indexes, but you should also have a feel of, well, what are the stocks that you're interested in doing? What I've noticed over the past several weeks now is that there's been a select handful of stocks that have done fairly well. Those of you that have been following along, you know that just locked down 50% in Nvidia. Um, Birkin stock, ticker BIRK, that was another big winner. That was 20 something percent. Um, Twist, TWST, that was another big one. That's a biotech that nailed down about 20%. And aside from those, for the most part, it's been fairly slim pickings. And the reason why is because of what we saw just a moment ago. And when we take that deeper dive into the general market, uh, we could see what's really going on, and we're far less likely to get caught in choppy waters. So, for example, here is Uber, right? So Uber was on my radar. And perhaps it was on your radar too. Looking at social media, there's been lots of people out there talking about lots of stocks and saying that they're all setting up now and they're having inside days and things like that. Well, I don't like to poop on other people, right? If something's working for them, wonderful. From my perspective, I'm seeing a lot of low quality setups. And if those happen to be high quality setups for somebody else, great. But if they're just putting things out for the sake of putting things out, then you guys are really doing a disservice to everybody, or at least to the people that you're trying to help. We always want to trade quality. Now, with Uber, this was starting to set up halfway decent, right? Price had broken out over here on heavy volume above the 50-day moving average. It pulled back, and over here, this was a halfway decent setup. It was halfway decent, but not good enough for me to say, you know what? I'm going to buy this thing no matter what. I almost smacked myself with the microphone. Anyway, it wasn't good enough for me to say, I'm going to buy this thing no matter what. So I put an alert on. And when I put the alert on, guess what happened? Price gapped up above the alert. So let's switch this around and let's go over to a 30-minute time frame, and I'll show you exactly what happened here. And this has been fairly common. You probably saw this in a few other stocks that you've been tracking today. So here's what happened on Tuesday. Price gaps up. Right? Let's zoom in a little bit, make those bars a little bit thicker. So price gaps up above the entry and then gets faded. And then gets faded for most of the day. And then by the end of the day, it starts to level off, rally. And now today, now it's back under where that original buy zone was. So you're getting plenty of chop. And this is why I say that this is the type of environment where if you're not careful, you're going to get shredded. There's plenty of stocks that will gap up at the open, get faded, and then be in chop land. You don't want to be there, right? So how do you deal with this? How do you deal with this? Well, there's a few things to deal with. There's a few ways to know how to deal with this kind of stuff. Let's go through some of that. All right, so let's go back over to this diagram because it really it all starts here. Most people will see stocks moving, get excited, and want to jump on board right away. With this, you have this is your expectation setter. right? How is this setting expectations for you? Because you're not just diving in because something is moving. You're taking everything into account first. You're taking into account, well, what's the general market look like? And then you have that. And you're not developing a bias yet. You're doing your best not to develop a bias. You're just taking data in. Then you take a look at the stocks that are setting up. You see how many stocks are setting up. Are they quality setups? And how's the market treating those stocks? That's your other piece of data. Then you take a look at your personal performance. And depending on how you're performing, that'll also give you another look into the overall market mood and how that's doing. That'll tell you, should you be betting light? Should you be betting moderate? Or should you be betting heavy? Even though I had 50% gains in NVIDIA, 25% in BIRK, another 20 or so percent in TWST. I'm not looking to bet heavy. I'm not looking to take all those profits and put them into the chopper, right? The market's a wood chipper right now, where you just put money in and it just spits out confetti, right? That's not the time where you want to be pumping money in. You want to test if there's a high quality setup, if something's high quality and it passes your criteria, great, put something in, but it's not where you want to go super heavy. And that's why you need these three lenses, right? Because it's not just about, well, what Mike says. You want to be able to run this for yourself. So let's go over here. There's a couple of comments coming in. Currently reading a book, started the analysis chapter. Yeah, so this stuff is in the analysis chapter of the Trading Mind Wheel, which maybe you could see it's tiny right behind my head back there. Go get that one. Go buy the book. It's on Amazon if you haven't bought it yet. And am I familiar with Qualamagi? I've heard the name before. I haven't read or watched any of his stuff yet. So let's get back into the charts. Right, so that's what happened to Uber. There's plenty of stocks that are looking like that right now. And here's one that I had on the radar for today, Meta. Meta's another one that breaks out, pulls back, breaks out, pulls back. And so here's a little tip for how to trade these, especially if you're in a choppy environment. So for stocks that I set an alert on, I set an alert because I don't want to just go run out and buy it right away. I set an alert so that way I could go check the price action as well as the volume at the time of the breakout. So Meta broke out today. It broke out right here on this bar. And so what happened on that bar? Volume was mediocre, right? And I can tell that because I've got this volume tracker right here. So for that particular point in time, volume was mediocre. So that's telling me that there's not a huge rush to buy the stock right now. So, and that's been the case with many issues, right? Well, we saw the same or similar action with Uber. It had that big gap up and then it spiked back down and then got faded throughout the day. When prices coming through the pivot, we want to see some power. If you don't have that power, guess what? Your odds are lowered. It doesn't mean that it can't work, but your odds become lowered. Someone is saying that the mic is off. I'm not sure. Let me know over on Instagram if that fixes the mic problem, or if not, you guys could go over to YouTube because apparently YouTube is working. If somebody over on Instagram can let me know if the microphone is working, great. If not, I'm just going to keep talking because you guys over here on YouTube apparently can hear me. All right, so let's see. Well, what was I with Meta? Oh yeah, so the volume is declining on Meta, and that's why I avoided that breakout. Let's see what Hood is doing. We had Robin Hood on the radar too. This is one that this is another one that's the same thing. Same thing that happened with Uber happened with Hood. Prashant, are you able to hear me? I assume yes if you're saying that the analysis is perfect. So let's keep going. All right, so Hood breaks out, gaps up, just like Uber got faded, right? And that's why, unless if the setup is absolutely perfect, I'm not looking to just buy it because it breaks out. How it breaks out, the action after it breaks out, the volume, all those things matter. And so that's why when a setup is good, and the setup on Hood looked good going into the day. Let's take a look at the daily chart. Right here's the daily chart. This is a classic pullback buy. Pulls back to the 21-day exponential moving average. Uh, that's the purple line. It tightens up. You have those other shorter term moving averages that are also tightening up right there, starting to turn up as well. Price breaks out. The volume profile on this one was good as well. Volume was drying up as price was pulling back. As price started to rebound, uptick in volume, that's exactly what you want to see. But just like so many other stocks right now, price gaps up. That's no good, right? You don't want to just buy because price is gapping up. When price gaps up, what does that do? That throws off the whole reward to risk ratio. Because if you're planning to buy down here and you're planning to have a stop loss down here, and then price opens up here, well, now you have all this extra space that's going to be a risk. That's no good. That's why you need to wait. And then oftentimes when price gaps up, uh, price gets faded right away. And that's what happened here too. So that's why you don't want to chase. Let's see. Let's go to some questions now. Javid, I appreciate your work, brother. Thank you very much. All right, so I assume Instagram is working if you guys are able to see this. Maybe try YouTube live stream for best response. Reason behind you tell perfect chart analysis. Prashant, yeah, well, I do my best. I don't know if I would call it perfect, but it works for me. Only the Lord is perfect. Um, Keep it simple over on YouTube asks, how many setups do you trade and have in total? Well, let's take a look at my playbook. Right. Well, why tell you when I can show you? Right. So let's stop this screen share and share this screen. All right, so let's go over to my setup list, and you have the book, so you already know what setups I like to trade, but this spreadsheet has all my setups detailed in here. So let's see, there's the pullback. Let's make it a little bit bigger for you guys so you could read it. The pullback buy, cup with handle, flat base, high type flag, VCP, short stroke, bump and run. I barely trade that. And yeah, that's about it. So six setups are my primary setups here. Every now and again, there's setups that I'll consider that aren't here that I'm still would be in a testing phase, but these are 98%, 99%. It's these ones here. And it's important to have the setups that you trade to be very well defined. And you do want to have multiple setups. So that way you're able to have enough trades to meet your goals. For those of you that are just starting out, don't try to have 6 or 7 setups all at once. Right? That was a mistake that I made when I was first starting out. Well, with Can Slim, right? The style that I adopted and later on started to make my own. I tried to learn too much too fast. A lot of people make that mistake. It's like drinking from a fire hose. It doesn't work very well. The way to if I could go back in time and give myself some advice, I would say to start with 1 or 2 setups, and that's it. Master 1 or 2, and then once you've mastered 1 or 2, then add another, then add another. Uh, you'll be able to learn a lot faster, and it'll prevent you from overtrading. It'll help to prevent you from overtrading. Let's see what other questions do we have. We've got about 10 minutes before I need to scoot. Now this is a very good question. Keep it simple. But doesn't having many setups increase the odds of finding trade opportunities? Sure. Sure. So if you let's say that I don't know, you went into Walmart and you just said, "You know what? I want to buy stuff." Well, guess what? Walmart has plenty of stuff. Yeah, you could probably walk out of the store with cartloads of stuff. But does that mean that you had a good shopping experience? Wouldn't it be better to say, you know what, I'm in the market for a blue button down dress shirt, let's say, right? Then you know exactly what aisle to go to, and you can start to look through all the different blue button down shirts that they have. Instead of walking out with a shopping cart full of stuff, now you know exactly what it is that you're looking for and what to buy, and you can start to gauge quality. Well, this one I don't like the fabric as much on this shirt as in this one, right? And so you've dramatically narrowed down the playing field. That's what it's about. Well, we need ways to define well what are we after, and uh, how do I know when I have a quality setup? Because you'll even for these setups, right? There's only 6, but you could find plenty of them and not know if it's a good one or not. Then what tends to happen is people have all sorts of what they'll call uh creative license or artistic license when they're looking at charts, and then they'll say, you know what, this one's close enough. And then they'll just buy it, and maybe sometimes it works, other times it doesn't work, and you just bounce around. Your equity curve bounces around sideways for years and years and years. And how do I know that? I know it because I experienced it myself. So what's the better alternative? The better alternative is to get precise with what it is that you're looking for, and to start out with just a few, because if you're trying to master too many things at the same time, you end up being the jack of all trades, master of none. And yeah, I think that there's a little bit of a lag between the video and the chat, but yeah, you hit the nail right on the head. The point is not to be a jack of all trades, master of none. Um, yeah, you want to master a handful of setups, and then once you've mastered a handful, then look to add something. Right? Let's go back to the charts for a second. Let's pull up let's pull up Meta. And I'll put my annotations on here. All right, so this is uh, I when I look at the chart of Meta, I see this cup with handle pattern. You see where I drew the red line there, and it kind of looks like a teacup. That's a cup with handle. It's a fairly decent cup with handle, primarily because of the right side of this, but that there's at least two or three flaws that are baked into this pattern here. Now, I see it as the handle portion, this area over here made up a lot of ground for the flaws that are in this section, but because of the flaws, I wanted to see this thing break out with power. It broke out, but it didn't have power. You want to get to a point where you could look at a chart and spot the flaws right away and determine whether or not you're willing to give it the time of day. And if you are willing to give it the time of day, under what circumstances? That's the level that you need to get to. Let's see. Well, what other questions do you guys have? Scrolling through Instagram, there's a few people over on X and on YouTube that are watching. Get your questions in. This is turning into a semi-private coaching session for Keep It Simple, but that's okay. If you guys are getting value, then wonderful. All right, well, we'll keep it going here. All right, Keep It Simple says, I read O'Neill's book and Mark Minervini's book, and I wanted to adapt all the setups. Yeah, that's what happened to me. I wanted to adapt all the setups as well. And because I was trying to do too many things at once, it took me, I eventually got there, but it took far more time than it would have if I was just focused on one thing at a time. Now he asks, will you trade a stock if it sets up technically on the chart but lacks the fundamentals or fundamentals are not up to mark like earnings? So I start with the fundamentals. I My process starts by screening the market, right? So I'll run scans every single week, and I'll build what I call a universe list. Now that's also in the spreadsheet here, right? So I'm going to share the spreadsheet again, right? So I call this my playbook. There's a bunch there's a bunch of stuff that's in here. One of which is my universe list. So there's about 350 stocks on this list, and all of them pass my fundamental screens. Once they pass the fundamental screens, then I'll go through this list and see which ones are setting up in one of those patterns that we were looking at earlier with the cup with handle, flat base, etc. I'll take that subset and I'll call it a setups list, right? Stocks that are setting up this week. Then I'll go through that list. And typically, there's any. In a halfway decent market, out of the 350 stocks or so, there'll typically be about 50 that are setting up in some kind of a pattern that I'm interested in. In a not so great market, uh, it'll tend to whittle down to sometimes 20, sometimes less than that. But in a halfway decent market, 50. Great. Then on to the next step. The next step is, well, there's 50 stocks setting up. Are these quality setups? And so I'll flip through the list and I'll find, well, this one's quality, this one's not, and I'll do that. And it's a manual process, and it takes me a little bit of time. I'd say that on a weekend, it's probably taking me about 2 hours start to finish. That's with all of the screening, with all the sorting, and then once I find the ones that I like, if sometimes there's zero that I like, sometimes there's a few. Once I'm said and done well with everything, probably takes me about 2 hours on a weekend. And then it takes me a little bit more after that because I'll record videos and write reports and send them out to people so that way they get that research. And for any of you that are on the call, you could try that out for free. And let me go grab the link and I'll put that into the chat for you. You could try it out for free for 2 weeks here. Anyhow, so uh, that's the process, and the reason why I want to start with fundamentals and then look at technicals is because it helps make sure that I'm fishing in the right pond. The reason why I start this way is because it puts the odds of success in my favor. Sure, we could find technical setups in anything. You could find the same kinds of flat bases and pullbacks and all that stuff in crypto. You could I've traded it in crypto and it's worked very well. So when it comes to stocks, the ones that are more likely to work are the ones that have the extraordinary earnings and the extraordinary sales and have leadership characteristics that are in leading industry groups, all those things. So if we could stack the odds in our favor, then we shouldn't we? That's how I look at it, and that's what's been useful to me throughout the years. All right, wow, we're finally getting some additional questions in here. Let's see, there's somebody else, trend trader. How to interpret volume here? How do I interpret volume? In a cup with handle? Yeah, your question. They're saying, please reply. Please reply. Ask your question clearly. So, interpret what volume? Do you have an example? Post it in. We could. Let's use. Let's use Meta as the example here. Right. So this is a cup with handle. So let's interpret this. Right. So you have the left side of the base over here. Right, and this is one where it's actually a little bit more easier to do chart analysis on the Trade Smart Tuesday because that one where we're doing it in landscape mode versus doing it in the cell phone mode. But well, we'll do it anyhow here. So you have the left side of the base, and then you have this price craters. It falls below the 50-day moving average, it falls below the 100-day moving average, and it does that on heavy volume. So the lots of selling on the left side of the base. Then price starts to level off. Volume is about average. Then on the right side of the base, price jumps back above the 50-day moving average and you have this uptick in volume. Okay, that's pretty good. Then price starts to level off over here. And the volume in this handle area is a little suspect. The reason why is because of this bar. In the handle area, when price is getting to the far right side of the base and it's starting to break out, you want to see a dry up in volume, particularly on the selling side. not an expansion in volume like this. But because the price action here was so tight, that's what still had my interest in it. That's why I wanted to set an alert, not a working order, to see, well, does price push through this with power? Because if you could punch a hole in the sky with power, then maybe you leave the atmosphere. But if you don't have the thrust, well, we'll see what happens with it. Maybe it's able to float up, maybe it doesn't, but it's not enough for my money. Let's see. Let's get another question in here. This one is from Keep It Simple. I'm interested in your Discord and the service, but I don't trade US stocks. I'm not clear about what is included. Also, will I be able to cancel membership after, let's say, 3 to 4 months if I want to? Yeah, so you're able to cancel it. We're actually putting that group coaching service on hold. So for anybody that's interested in it, it's going to be by invitation only, starting effective immediately. Right. So the reason behind that is because we want to build the service in such a way where everybody's speaking the same language, right? So if people are coming in from, and I don't mean that in a way where somebody's speaking German, somebody else is speaking Italian. That's not what I'm talking about. Well, we should all come from the same, having read and studied the same things, be trading in similar ways, or at least have a similar mindset. If somebody's walking in the door and they have a completely different way of trading and they're not coachable, then those aren't the type of people that this program is for. And that's why no, we're locking the door uh, uh, for now, right? We're in the process of doing that. I've got a call later today to speak to my buddy Jarek, who helps me out with the website, and we're going to put a big sold out sticker on both the premium and on the VIP. And it's not that you'll never be able to get in, but the way to get in will be through invitation only, and it'll be for people. The first level of invite, if you're in the research program and you want to upgrade, then we can talk, because you've already experienced the research. You've experienced my style. You're able to email in questions every now and again. But inside the research program, it's not just sending out a stock list. I'm putting a video that explains everything to you every single day with this stuff. And it's not long. It's about between 5 to 10 minutes every day. So that way it's giving you a little bit more. The idea is not to just tell you what to do. The idea is to educate. So that's the idea with that. So yeah, keep it simple. Um, yeah, if that doesn't work for you, then I'm sorry, but um, and that it is what it is. So hopefully you're at least able to come to these and get some value here if that program doesn't work for you. Bunch of other stuff coming in from Trend Trader. How do you use volume in the cup and handle panel? All right, so we spoke about all that. Um, what other confluence do you see? Uh, the relative strength line was a bit weak. So this down here, that's the relative strength line of the stock versus the S&P 500. If the relative strength line is curving up, it's outperforming. If it's flat, then it's in line. If it's dropping off, then that means that it's underperforming the S&P 500. So that trend line there that's red, that means that over the past 50 days, it's underperformed. This line that's starting to move up over the past 7 days. Maybe you see it, maybe you don't. There's a thin green line there. Over the past week, it started to outperform. But when I take a look at another thing that I'll look at is the line overall, the relative strength line overall compared to the price action, and it's it's not blowing smoke, right? It's good, not great. So that's why I'm not like the setup was okay, but it wasn't one that I was super excited about that I'm diving into. And because it triggered the alert and volume isn't there, I'm not looking to take it. Keep it simple. Is the research program open? Yes, it is, and there's a 2 week free trial, so you could feel free to hop into that. I'll post the link. Well, I posted the link already, so go grab the link and take the free trial to that program. All righty, and we are already way over, right? So we're going to need to wrap things up here. We are streaming multiple times a week, right? And so before we head out, I'll let you guys know this. We are streaming multiple times a week. Uh, as far as the business model goes, I'm trying to do a lot more streaming, so that way able to come on here, answer a lot more questions. Hopefully, we get a lot more activity in the chat. Keep it simple. You're keeping the comment section alive. Thank you, Trend Trader. I appreciate your questions too. But we need more people actively engaging, so that way, it makes these sessions more valuable, and then the recording is up there for people to see. And then with the research program, you guys are getting all my stuff every single day, videos that help explain things every single day. And no, it's a real value, and you get 2 weeks for free. So why not try it out? Alrighty. So think that is it for today. So, again, thank you all so much for joining me. And if you have any questions at all, please drop them into the comments. Make sure that you're subscribed. Subscribe on YouTube, right? That's the best place because you can see the questions coming in over here and you're able to interact. Um, so make sure that you're subscribed to and share this show with somebody. If you like it, make sure that you click the like button because that's going to help boost the algorithm and get this to more people. That's really the objective here with why I'm doing this. I love helping individuals. I want to help more people. So please help me with that mission. Like, subscribe, do all that stuff, and Uh, I'll see you on Friday. We've got another live stream. It's called the Traders Mind Chat Show. That one is more about the mindset and the psychology of trading, and we'll go into topics there. Until next time, take care. Much love. God bless.